What is going on, everybody? And in this video, we're providing you a state of the market and stock picks for March 1st, 2023. So if that sounds like something you are interested in, consider subscribing, as we do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market. So, interesting information that did come out this morning. You did have Morgan Stanley and JPM essentially telling you this morning that March is going to be a down month. They told you a couple of weeks ago that we hit the peak of the bear markets of this year. And then, not surprising, again today, and they announced that March is going to be a fall off year, or fall off month, excuse me. So, which is interesting to see, because if you reflect back onto when we had this whole earnings cycles normally pump, but you had a lot of emergency bond buying going on as well, from Bank of England, from Japan, a couple different times. And understand that because of the debt system that we are in, this has a dramatic impact on what's going on with the market. And understand the market's been propped up with low volume, and wondering why we are screaming upwards when everything in general is really bad. Now, it's not saying that we have all these reports. There's all these jobs out there available. You can define it however you want, but ultimately understand, just living day to day, you can feel the heat. You can't tell me you don't feel the heat by going to the grocery store or filling up your car. Any of those case scenarios, just paying rent in general. We did have Target this morning. Again, projections are extremely low in the dirt. So if you do better than expectations, you're on top of the world. And so we saw that with Target today. They're going to try to go cheaper and buy more essential groceries is what they're aiming for. Forward guidance looks bleak. Tell me what's new. All these potential earnings that we've had, or these earnings we've already had, show extreme signs of weakness. Q1 will get worse. Q1 earnings will start reporting in only a month and a half. We'll start get earnings. We'll start get Tesla. We'll start get all the big tech again here in about another month and a half. Until then, all we have to go off is data. This week we're very low on data. We've had some pending home sales yesterday, kind of moved the market, kind of had us have that drop from the 40-20 yesterday. Again, painting this picture that everything is fine and dandy. People are buying homes. People are concerned, I think, in my opinion, that these interest rates will continue to go higher, and that to try to afford a home, you'll be even more priced out. And that is what's essentially being fed to people to buy homes, and something we talked about yesterday. So nonetheless, I don't want to dive into that because we did talk about that yesterday. But nonetheless, where we're aiming towards at this point, the market is very indecisive. As you can see, you got very, very indecisive candles. This range is getting tighter and tighter. There is nothing this week that is really going to break us out of this. Next week, again, we have non-farm. We got some more additional data as well. We do have jobless claims every Thursday. It's not going to push the market. It's not going to be pivotal. There won't be a pivotal move in the market until we get one of the bigger events coming up in the next coming weeks, but not this week. So that being said, we have to wait and see until we get non-farms, till we get the next core. Again, the biggest concern being is if core starts climbing back into the high sixes, or potentially even in the sevens, that's going to be a major issue. Or something that we need to be concerned about is that if it does, that it could be enough to drive the market down. If the inflation starts to run, we start getting back into sevens, and then Fed start raising rates to 50-point basis moves, it's going to be an issue and draw enough panic to perhaps cause another 15% dive on what's next, because that's not what's anticipated. People were expecting a phase 2 of let's just hold rates at 5% and everything would be fine and dandy till the end of the year, and then we could start actually decreasing rates by next July. Not the case. The scenario has changed. Even the 2% we're aiming for has been pushed out 6 months. Things just are looking very bleak. things do have to get worse. There is stuff that is being reported that's making it believe that things are okay, that the market can take more high rates, that 5 to 5.25 are not high enough, and that is the concern moving forward. So we will see what comes of everything, but ultimately, right now, what we're aiming to try to do is to just hold tight. Every day is not a trading day. You have to be mindful of that. Every day is not take position day. If you are in these tight ranges, you're asking to get burned, especially if you are in options. Options get chewed up a lot in markets like this. You wait for a move to break out. You have a range, you have a daily range. And this thing needs to break out of that. Use previous day highs. That's why I have these white lines on here and these white dotted lines to gauge my yesterday's highs and lows, which I set every morning. And then from that point, I watch the markets. I do have supply and demand. It's a big component of that. But the daily range, the market will kind of play within that daily range. And so with that being said, especially in markets like this where it's really tight, this daily range is getting tighter and tighter, which I don't like. Then I just won't play it. And I've sat out and just not taken anything because there's no point. The market's too high to take any shares to the long side. And so, we don't have that catalyst just yet to really take a short right now. I'm waiting for confirmation on the short. Again, some tech stocks I've talked about is Tesla and NVIDIA had monster rips up. Tesla does have investor day tomorrow. Tesla could be a big play tomorrow. It did have a big bump overnight and then sold off quite a bit this morning. But you do have to be very careful because one of the most memorable investor days I've had is when the Cybertruck rolled out and then they broke windows and it dipped quite a bit the next day. So nonetheless, that's not traumatizing at all. But with that being said, we have to be patient. You have to be patient and not be impatient in this kind of market. To think we're just going to V-shape out of here is not going to happen. So tomorrow, what we're looking at, again, this essential line here, roughly the 39.78 is what I talked about yesterday. You have to keep an eye on this. Where's the market going to land? If it's going to go up, 40.20, down 39.40. Watching these ranges, the market could pong back and forth between these two ranges right here until it gets an answer, until it gets a pivotal data that's going to say, okay, well, this is the next move by the Fed. Inflation is hot. We're going to go down because that means we don't have it under wraps. Or inflation is improving. We're down to 6% into 5. The market rip off that. You would have a huge rip if that happened on the next core. If it doesn't, you're going to get some major selling. The next core is very pivotal because it's going to dictate the rest of the year. And something that the Fed has talked about multiple times is that you have to have it's heavily reliant on data, and data changes. And if you're in the market at all, you have to realize that there's nothing that is black and white in the stock market. It's not that simple. You can't strictly play patterns. You're playing against algorithms for the majority of the day. You have to understand that, and you're playing against big institutions, right? That use supports to break your supports to get liquidity to make their runs, and so you have to be mindful of that. So these are all things you learn in time in the market, but ultimately, right now is just not the time. You have bonds. Emergency bond buying that's essentially been propping up the market for the last couple months. You've heard it out of China. You've heard it out of Bank of England. You've heard it out of Japan. They're all emergency bond buying to keep the market propped up. You're wondering why these things are ripping and there's no volume. It's exactly why, right? We're off a debt-based system. Bonds play a huge part in this system. So we have to be mindful of that. And with that being said, you're getting a propped up market. Otherwise, this market would probably be way down by 3,200 at this point. There's no way of knowing for sure, but all these emergency bond buyings, you have to understand that that's what's going on. So being said, we take it day by day and see where we land. So SPX, that's pretty much what I got. Bitcoin, again, it's coming down slowly but surely. I put this on the daily so it doesn't look so crazy for everybody. Could be a bull flag. At this point, this is why event outweighs any kind of technicals, because if an event comes out and the market starts getting crushed, that's going to take down Bitcoin. And the same token, if it's something positive, like maybe Powell wakes up and is super excited and he's just going to start taking off rates tomorrow, this thing could explode. But again, we have to sit, wait, and watch. So Bitcoin, again, waiting just like the market. The dollar is getting very strong. It does need to break above roughly the 105.70 for this thing to really start going absolutely crazy. But it's something we need to keep an eye on, is that dollar. If it really starts racing, it's going to be an issue for the rest of the market. So something we need to keep an eye on and keep watching. Tesla, again, over the past couple of days, it's kind of just been playing this range from 191 up to 215. So it has an investor day tomorrow. This thing could have a nice explosive move up to 217 tomorrow. Again, it really depends on investor day. If not, you'll probably see this thing more than likely down at the 194 tomorrow. And if it breaks 194, you got a pretty big fall down to the 180, and then again at the 165, and then a big gap down to 140. Again, I think my target eventually is going to be 140. We just have to wait for this thing to play out and see what happens from there. Again, if it's really bad, if we haven't tamed inflation, tech is going to get hit really bad. We saw what it did all last year, and that will happen again if inflation starts to run away. So just be mindful of that. So that's what I'm watching for on Tesla. NVIDIA is one I really like for the short side, but I'm really waiting for it to break this. I really wanted to get below the 229 to fill this gap. If we can get below a 229, I think this will be a huge gap fill. So I'm really keeping an eye on this. One of them I do want to watch on the dip, especially with all the information that's coming out with ChatGPT and the amount of CPUs that they are using for ChatGPT, especially in the NVIDIA CPUs, is mind-boggling. And it's not even, they can continue to add more chips to ChatGPT, which is really interesting. So I do want to keep chips on high alert when we do start to dive again, as I believe this is not the bottom, and we will see. It could be, it could not be. Time will tell, but that's just my opinion, and it's just my opinion alone. So with it being said, BA, again, slowly grinding down. We need data. If we don't have data, this market isn't going to go anywhere. Value is slowly crumbling, but it is getting there. So we'll start to see. It's good to see some weakness here, because we haven't seen weakness in such a long time from BA. So hopefully this thing continues to sell off and we continue to get normalization. Same with JPM, looking strong here, though, like it wants to break the 144. If it can break out, that will fuel the market to the upside, potentially give me that spike up to 4,100, a potential attempt to run there before the next coming weeks, before we start getting some big data that can potentially cause a big blow to the market. So Goldman Sachs, huge sell-off after today's comments on what's going on. Again, these banks have essentially been taking huge hits on the comments that they've been making about any kind of recession or anything like that. Again, today is the same thing. So we'll wait and see what happens there. Bank of America just not really doing anything there. So that's pretty much it. I don't want to make these videos long, because there's not really a lot to talk about till we next get the next data sets. We can brainstorm and assume all day long, but ultimately we have to wait for data. We need some sort of news event, a catalyst that's either going to say inflation is continuing to climb up, inflation's actually getting better, or something breaks. Right, whether it's consumer, auto loans, home loans, something needs to break. And when it breaks, that could be the hair on the camel's back that just sends us to a new low. And then, in my opinion, that would be bottom. And then we could recover from there. I wouldn't say it would be a V-shaped recovery. That's just not going to happen. We start slowly creeping up, and then potentially even leading into money printing again next year. So we'll see. I think right now, with the tightening and quantitative easing this year, I think we will see a big break in the sell-off, and then at some point next year to try to revamp everything, you could potentially see money flooding back in. It really just depends on how things play out. This is why nothing is just black and white. So nonetheless, if you've made it this far, go ahead and drop your thoughts and ideas of what you are projecting for 2023, what you're looking at, so others can see and view and comment and interact. Aside from that, go ahead and drop a thumbs up. And until next time, I will see you guys later.